Views, thoughts, and opinions expressed are the speaker's own and do not represent the views, thoughts, and opinions of the Your Gray Matters podcast. The material and information presented here is for general information purposes only. The Your Gray Matters podcast name and all forms and abbreviations are the property of its owner, and its use does not imply endorsement of or opposition to any specific organization, product, or service. Hello, everybody. Welcome to Your Gray Matters podcast. My name is Neil Silvert. I'm the host and the creator of this podcast. This podcast should be of great interest to people who have gray hair, have no hair, or in the process of earning either one of those. Many years ago, I became an entrepreneur. I got involved in real estate investing. I got involved in private ownership of companies. And the one thing that I learned from one of the great minds, one of the great writers in this world, his name is Paul Pilzer. He said, the human mind cannot be defeated. It changed my way of thinking. I started realizing that people can always come up with answers, with solutions. This show will pursue solutions and ideas for boomers, for people with gray hair, no hair, or they have kids who are not that far off to their age. One of the things that's become very apparent in the last few years is that seniors are struggling with income. They are in need of more income than they expected. Perhaps their retirement plans are being put on hold a little bit. And as I started to talk to people, I realized that there's perhaps a significant gap in information and knowledge that is out there about ideas when people need to find more money. So we are looking today at solutions because when I speak to my friends, my colleagues, people of our age, and I go, hey, what are you looking at if you need some help? They say a reverse mortgage. Well, a reverse mortgage is a great product. We're going to talk about that today, but in fact, there's many ideas, there's many solutions, there's many things that people are not aware of. Sometimes when the bank says no, you have nowhere to go. You're not sure what to do. Today, I want to introduce you to one of the finest people I've met. His name is Bryce Bettencourt. Bryce is actually my mortgage broker. I am a licensed mortgage broker. When I wanted to go into real estate investing years ago, I decided to get my license. So just so that you understand, I'm licensed too. But one of the finest minds is on with us today. Let me introduce to you Bryce Bettencourt. Hi, Bryce. Welcome to the Your Gray Matters podcast. And I have to say to the people who are viewing this today, Bryce hasn't earned any gray hair yet, but if he takes off that hat, you'll have a sense that he does seem to be one of us. So
yes. That's why the hat will stay on for now.
Let me tell you, under that hat, ladies and gentlemen, is a brilliant mind and a fine person.
Thank you.
Hey, Bryce, welcome to Your Gray Matters. I've known you
Thanks
for quite a few years. You've been probably the best teacher that I've had in this field. Bryce, tell us a bit about you. Why this industry? Why for you? And what are some of your beliefs?
Yeah, no, thanks for having me. I'm very excited to be here and chatting with you. No, I've been in the industry now, almost 10 years, maybe a little bit over. A little bit of background. I started as an underwriter. I underwrote for about 5 or 6 different agents, and what that means is essentially they would provide applications to me, and it's up to me to triage the file, take it from point A to point Z, uh, guide the clients, advise the clients, so on and so forth. So in that, through my 10 years, I've been able to kind of go through a bunch of different scenarios, a bunch of different, you know, applications when it comes to, all applications kind of being different. So I've seen a lot, I've been through a lot, and I've been able to provide a lot of solutions for a lot of different scenarios where a lot of people don't really think it is possible. Now, with that being said, I stopped that role about 3 to 4 years ago and decided to partner up with a longtime friend of mine and colleague of mine, Victor De Silva, and start the residential arm of Chartered Finance. So here at Chartered, my role is principal broker. So I overview and overlook, all of the agents, some of their dealings, and as Neil kind of alluded to, I've been able to assist in a lot of my agents' deals to get them to a point where they can then fund their clients, as well as just give them different perspective, different outlook on different scenarios that they may not have thought was possible before. My passion is helping people, and getting people in better places, and helping them, achieve their financial goals when it comes to, you know, owning properties, consolidating debts, or just finding a little bit more flexibility within some of their assets that they have.
That makes total sense. And just for full disclosure, I have my license with Chartered Finance because I have found that the service and the quality is terrific. But this is not really an advertisement for one brokerage. This is a show about solutions. Bryce has been in my life that I've been with the company, finding solutions where my mind had no idea that they exist. Let's talk about a few of those today. Maybe let's start off. When I talk to friends of mine who are looking to access equity or to find more money and they don't want to go to work and they'd like to stay in their home, which is a big thing for seniors nowadays, let me ask you, let's talk about reverse mortgages. There's a lot of misunderstandings, but clearly they're not the only answer. So let's have a discussion about that and other solutions.
Sure. So yeah, just to touch on reverse mortgages, over the years they fine-tuned it, whereas maybe 5 to 10 years ago, uh, reverse mortgages may not have had the best reputation. They were known to, eat the elderly's equity without giving them, proper, I want to say, solutions, because, let's say, for example, the interest rates were 9, 10, 11%, the interest accrues on the mortgage as opposed to paying down the principal. So what ends up happening is, let's say, for example, somebody has 500,000 of equity. We tap into 200 of it, and over the course of 10 years, you may not have equity remaining from the amount of accrual on the mortgage that gets tacked on top. Now, a lot's changed since then. There's programs under the reverse mortgage umbrella that allows you to make some capacity of payment, or make a payment that is more flexible to you, the client. For example, let's say, for example, going back to that 500K, tapping into the equity, instead of having that interest accrue all the way to where you run out of space, you can make payments of $500, $200, $1,000, whatever you're comfortable making, to offset the interest that's owing over the course of the term. So that has always been, a new direction that reverse mortgages are going. I'm not going to tell you that the reverse mortgage interest rates are low, because they're not. They are still quite high as comparison to all the other banks and or B lenders that are out there. But the key with reverse mortgages that people need to look at is it's a solution. It's an avenue of, the rates are increasing. We're at a time where the variable rates have skyrocketed. Um, your payment might have went from $1,000 to $1,500 on a fixed income. Being a little bit older, that might be a tough pill to swallow, an extra $500 a month.
Absolutely.
Now, with that being said, you know, is a reverse mortgage the best way to go for something like this? Not necessarily, but if your lifestyle, you prefer to live the lifestyle of not having to penny pinch, or not having to not be able to be flexible, maybe not be able to enjoy the latter years of your life, this is a solution for you. Another way of looking at it is also from a tax perspective. You know, to kind of say it without saying it, if there's two things in the world that is inevitable, it's taxes and death. And a lot of elderly people, when they pass, unfortunately, their next of kin, their children or whomever, have to deal with probate, taxes,
Yep.
capital gains, things of that nature. What a reverse mortgage could do for people, where their properties are free and clear, is allow them access to their equity. So getting cashed out, let's say on $1 million, they get cashed out 500,000. And when they pass, or when your children want to sell the property, or when your children want to take over the property, 500 of that money gets paid back to the lender, plus applicable interest. But you're dealing with a lot less of a tax bill. It's almost like an early inheritance, if you want to look at it from that perspective. So again, it's not for everybody. It's not a be all and end all in regards to a solution, but it is going to enjoy the latter parts of your years, maybe giving access to an early inheritance to your children without your children having to go and deal with the tax man, and paying heavy taxes on a property that was your parents' home, or so on and so forth, right? So the way that I see it is, from a cash flow perspective, allowing you to enjoy your later years, being able to be more liquid in regards to the income that comes in. That really does free up a huge part of time and money in that regard.
That makes a lot of sense, Bryce. And I think that there are misconceptions that people can lose their home, or if after
Yep.
they pass away, if the house doesn't have the value of what's owing on the mortgage, their kids will have to pick up that difference. And neither of those are true, and they really are misconceptions.
I agree. And again, going back to it and just touching on it ever so slightly, in the event that you do take a private mortgage, it may not be a forever solution. It could be a short-term solution. So you can get yourself into a reverse mortgage for 2 years, because your plan may not be to keep the property long-term, but you are still trying to free up cash flow for at least the time that you are planning on living there. For example, if you're in your 60s or 70s, and that you're in a bigger home and you're looking to downsize, but just not right now, you want to take your time in your process from selling a property, moving into a new property, so on and so forth. This could be a solution, to free up your cash flow, make it so that you have no monthly payments every month when it comes to a mortgage payment, and it gives you the time and ability to actually go shopping and kind of move on your own terms, as opposed to being pushed out because you just can't simply afford the monthly bill.
And that's terrific. And one of the things I've learned from you, because reverse mortgages are one idea, is in fact, there's lots of opportunities, and perhaps people are just not aware of them. Let's start, I'll use the word top, but I don't mean it in any other way than the first item. People need to borrow money, they go to their bank. For some reason, the bank says no. What do people do? Why might they be turned down at their bank? Maybe quickly discuss that.
Yeah, definitely. So, I mean, obviously, the banks follow very particular rules and protocols and policies, where your gross annual income has to be under 44% of your gross total debt.
Okay.
Meaning, and to use easy numbers, for 100,000 a year in gross income, you're only allowed to have 44,000 in annual debt. Meaning your monthly payments on your mortgage, if they exceed $4,000, you're going to get declined. That's 40%. Sorry, that's almost 48% a year. The bill, that doesn't fit the bill for the bank, so it's a hard no. In certain people's circumstances, where they're going from maybe, let's say, making 100 grand a year to retiring, and now they're making their pensions maybe 20 grand or 30 grand a year, that's a typical situation where the bank would just hard decline you. Now, obviously, there's other elements that can come into play: net worth, co-signers, or any other sources of income. I'm not going to touch too much on that right now because it's not kind of the topic. But if we're looking from a perspective of simply just keeping your cash in your pocket and freeing up cash flow, the banks don't care about that. They just care about the bottom line: 44% of your total annual debt. Your total annual income not exceeding 40%. The debt not exceeding 44%, if that makes sense.
Understood. So let me jump in there and just say, So now you've gone to your bank, you've dealt with your bank, they're your friends. That's why they're here. And
Yeah.
you get a big fat no, but you got a bill to pay in the next week, 2 weeks, a month. Now you're
Yep.
not sleeping or something's bothering you. Where, what happens when they come to us?
Yeah. So
Let's talk
essentially,
about that.
sure. So I mean, essentially, when clients come to us in these situations where the bank has already said no, we explore all the different avenues. There's credit unions, there's B lenders, there's private lenders, so on and so forth. If I had to chime on in each of them differently, credit unions typically follow different rules than banks do, so there is opportunity potentially to get mortgages slipped in through credit unions, but there's not much more flexibility than a bank. So the shoe has to fit. Now going over to a B lender scenario, this is where the ratios are allowed to get extended. They still do care about income. So the bill, again, has to fit their criteria. It's very particular. And then obviously there's the private lending route where, they only care about the equity. So in cases like this, rates do fluctuate as you go up that ladder, starting from a bank being lowest, credit union being slightly higher, B lenders being slightly higher than that, and obviously private being even higher than that. But I don't want to touch too much on rates because
Sure.
the rates almost don't matter when you're looking for solutions for certain situations.
Sure.
That's why the reverse mortgage, as well as even just private lending in general, if you're looking for a short-term solution, the rate can be 100%. It means nothing to you on a per annum if it fits your criteria and helps you with your solutions. Now, obviously, 100% is obviously something crazy. I'm not going to sit on that number. But there are ways to navigate it where you're still comfortable. You're still, getting what you need, and at the end of the day, still affordable. And what I mean by that, if we had to dive a little bit into the private mortgage option, there's a bad stigma around it, because obviously a private mortgage to some means, you're getting money from, these companies that charge 8%, 9%, maybe there's fees involved. Um, and, it could be very expensive up front, but, you know, you can't look at the expenses when it comes to your well-being, and what you need to fit your bill. I'm not saying jump yourself into a private mortgage if you plan on living somewhere forever. Why? Because yes, the interest rates and the fees, they're not sustainable. They're not meant for somebody who's looking to live in a property for the next 30 years. Could they be an excellent solution for somebody who's looking for maybe a 2 to 3 year bridge or a gap? 100%. Because if you have equity in your home and you can't afford what the banks are giving you, there's opportunity to roll your payments in to a private mortgage. So you're essentially borrowing your next 3 years of payments from your equity to allow you to live comfortably for the next 3 years without any monthly payments.
With
You know what I
no
mean?
payments at all. Bryce,
Correct.
I'm listening to you, and what you're saying makes a lot of sense to us, of course. And ladies and
Yep.
gentlemen, what Bryce is saying makes sense, but let me make it perhaps a lot simpler. This is a lot of stuff to go through.
Sure.
So you use Bryce at Chartered Finance, or myself, because Bryce knows where to go. So what I love, Bryce, is that we just don't come up with options. The first thing that we do
Correct.
is we work with the client. The most important thing is what you want to and or need to accomplish. Then we look at your scenario. We understand what you're trying to do. For how long? Do you want to stay in your house? Do you want to sell your house, but you need time to fix it up? You have some big bills. You'd rather not pay the big credit card fees. All the scenarios are real. The beauty of having Bryce is that, and he's done it for a lot of people who I know, is that you talk about scenarios, you go through what's appropriate, what's not appropriate. Bryce comes back to you in a very timely fashion with your options. This is about options and solutions
Exactly.
that serve you. And Bryce just said something so interesting. Bryce did this for people who I know. So this was a couple who have no income at all. They're living in their home. They're actually, unfortunately, disabled. So they really don't have income. So right away, when people think, well, I don't have any income, then how can I get a loan? But what was miraculous is in going through, as I said, Bryce went through, understood their situation, understood their scenario in life. They actually didn't want to stay in their home, but they wanted, because they're disabled, to comfortably take a couple of years to fix up the house, put it on the market. But they didn't have the cash for that too. But in fact, they did have the cash. They had lots of equity in their home, but they didn't have any income to borrow the money or to make payments. And that's why Bryce mentioned including the payments in the body of the mortgage. So that has made this couple so excited. They're now fixing up their house. They're using the equity in their home, the amount that they borrowed through this, and they make no monthly payments. That is one solution, one scenario opportunity. There's many, and that's a part of why this podcast is looking for solutions, because I'm a great believer that the human mind can't be defeated. But if you don't know where to go, then you don't know how to start. What else
Exactly.
would you say, Bryce, about the mortgage industry nowadays? There are things that people just don't understand. I heard a story recently about someone who didn't understand CMHC. Maybe touch on CMHC, because
Yeah.
that's in our lives.
Yeah, no, definitely. So, mortgage insurance, there's a big stigma around it, obviously, that it's only for first-time home buyers, and putting less than 20% down on a purchase is only eligible for first-time home buyers. That's not the case. Putting less than 20% down, you can do at any time. However, you have to fit the insurer's guidelines. Some off the top, you have to be, the purchase has to be under $1 million. You have to put, minimum 5% if it's under 500,000, and then obviously it's scaled over 500,000. So for everybody listening, it's 5% of the first 500 and 10% of the difference. So if you're purchasing something for 800,000, 25K is your first 500, 5% of your first 500,000, and 10% of the difference, 300,000, would be 30. So your minimum down payment on an 800K purchase, pending qualification, is 55,000.
Ah,
Okay. Now, with that being said, CMHC, Sagan, or Canada Guarantee, these are the three insurers in Canada. And what they do is they essentially protect the lender. It's default insurance for the lender. It's
so
not
it's
life or
not protecting
disability.
the borrower.
No, no, not at all.
Ah, okay.
It's so that the lenders can comfortably give a mortgage to somebody with less than 20% down, meaning not a lot of equity, right? And if that client, for whatever reason, defaults, the lender's protected with their initial investment by paying the insurance. Now that insurance bill gets rolled into your mortgage. So it's not something where they turn around to you and, the insurance premium is 3% of the loan size, using a round number of 400,000, 3% 12,000. It's not, hey, purchaser, you need to give us an extra 12,000 on top of your down payment. That 12,000, your loan size would essentially be 412,000. And that's
Ah,
rolled into your 25-year amortization, and you're paying that throughout the term.
okay. And that makes sense. And then there are protections too for borrowers. And this is not a show about insurance. That'll be on a further show. But just to touch on it, there is insurance that's a great idea for borrowers in case, God forbid, something happens to them.
100%. And, life and disability, a lot of consumers do have that kind of stuff included into their work. But I like to, refer off to insurance agents for this part of the business, simply because there's other solutions for you instead of your typical mortgage default. Your mortgage life insurance or mortgage disability insurance, because typically those only ever cover your mortgage, but it doesn't cover the after. So if you have, family or anybody that you want to have taken care of, but you have mortgage insurance, life insurance, and heaven forbid anything ever happened to you, just your mortgage will be covered. That doesn't, help with the burial, or doesn't help with dealing with anything after the fact, or doesn't leave your family with much of anything after, right? So these are things where, again, I kind of defer to the professionals, the insurance brokers in the world. So, like you said, it's definitely a show. It's definitely a show for another time, because it is good information that you can get from other agents as well.
Yeah, and we'll be doing that with an insurance professional in this series because they do hand in hand. But I like the fact that Bryce stays focused on what he does clearly. And I hope that you've gathered that the power of a mortgage broker is quite terrific for we consumers because it
For sure.
gives you a chance to get an unbiased opportunity solution that will solve your problem without trying to sell you a specific product that maybe isn't for you. Why I deal with Bryce and Chartered Finance is because we are connected to all of those solutions that you heard today. We have private lenders. We have got the institutions. We have great connections with the banks. I like what Bryce is doing. I bring it to you for you to simply say to yourself, maybe there is an option for me. So to get in touch with us, to get further information so that Bryce can have a look at what you need to do, just email us that you would like more information at yourgraymatterspod@gmail.com. That's yourgraymatterspod@gmail.com. Once you make a request, that will go straight to Bryce. Bryce will be in touch with you. And I'll tell you, he's really making life livable and workable and a lot happier for a lot of people. We at Your Gray Matters, that's what we want to do for you, give you solutions and great ideas. Bryce, I want to thank you for being on today. You really are special. You sure that you don't want to clarify for everybody that you don't have any gray hair, but there is nothing under that hat.
Well, you made a comment earlier, or lack thereof, hair. So that's why the hat's on for today.
and I see it's the Blue Jays, but we'll see what happens this year. So if you have ideas, you have things you'd like us to talk about, drop us a line, yourgraymatterspod@gmail.com. Thanks for listening in today.
There you go.
Take care. Thanks, Bryce.
Thanks for having me.
Appreciate you.